Here's a bold statement. Wall Street's resilience is defying historical trends this September, a month notorious for being unkind to U.S. equities. But here's where it gets intriguing. Despite the odds, the market is not just holding its ground, but advancing, with major indexes on track for weekly gains. And this is the part most people miss. It's not just about the numbers. It's about the stories behind them. Stories of cost-cutting triumphs, trade negotiations, and the Fed's monetary policy maneuvers. On Friday, Wall Street's main indexes climbed higher after a turbulent start, buoyed by a mix of corporate earnings surprises and geopolitical developments. FedEx, the global parcel delivery giant, saw its shares rise by 2.6% after reporting quarterly profits and revenues that exceeded analyst expectations. The company's success? A strategic focus on cost-cutting measures and robust domestic deliveries, which offset weaker international volumes. This is a classic example of how internal efficiency can shield companies from external headwinds. But FedEx wasn't alone in its ascent. Apple gained 3.1% after JP Morgan raised its price target, while Palantir Technologies and Oracle drove the SP 500's technology sector higher. 8 out of the 11 SP 500 sector indexes were in the green, with technology and utilities leading the charge. However, energy stocks took a hit, falling 1.37%, a reminder that not all sectors are sharing in the optimism. Controversial point alert. While the Fed's recent rate cut and hints of further easing have undoubtedly fueled market optimism, some argue that this could lead to overheating. Scott Ladner, Chief Investment Officer at Horizon Investments, noted, "Certainly if the idea is the Fed is moving in a direction to relax the inflation target, that is definitely a recipe for running hot. And that's good for stocks. But is this sustainable? Or are we setting the stage for future volatility?" We'd love to hear your thoughts in the comments. Adding to the day's intrigue, US President Donald Trump and Chinese President Xi Jinping made headlines with their first phone call since June. The leaders reportedly made progress on a TikTok deal and agreed to meet face-to-face in South Korea as early as next month. This development could signal a thaw in US-China trade tensions, though it's too early to tell if it will translate into tangible market gains. Not all news was positive, though. Lennar, a leading home builder, saw its shares drop by 4% after reporting lower third-quarter profits and forecasting weaker-than-expected fourth-quarter home deliveries. This highlights the ongoing challenges in the housing market, particularly around affordability. On a brighter note, Paramount Skydance surged by 5.6% following a CNBC report detailing its potential bid for Warner Bros. Discovery. While the offer may come later than anticipated, the mere possibility has investors excited. Meanwhile, the small-cap Russell 2000 index, which briefly hit an intraday record high, ended the day down 0.64%, though it still notched a record close on Thursday, its first since November 2021. Thought-provoking question. As Wall Street defies September's historical slump, are we witnessing a new era of market resilience? Or is this a temporary reprieve before the next downturn? Share your insights below. We're eager to hear your take on where the market is headed next.